Council, NAPC, in alliance with the International Trade Center, champions women-led businesses in the African Continental Free Trade Area. African Development Bank says Africa's annual loss to carbon tax may hit $25 billion. Nigeria is said to be a net exporter of fuels as Dangote refinery commences fuel production as first crude shipment lands this Friday. Plus, U.S. jobs data in focus as global shares climb. The program is Business Express, reaching you from Abuja, Nigeria's capital. I am Musa Abubakar, your guide. Well, let's now begin the program by telling you that Nigeria to soon be a net exporter of refined petrol as the Dangote oil refinery in Nigeria received its first cargo of 1 million barrels of crude oil from Shell International Trading and Shipping Company, bringing the start of operations closer after years of delays. Once fully running, the 650,000 barrel per day refinery funded by Africa's richest man, Aliko Dangote, will turn oil powerhouse Nigeria into a net exporter of fuels. The next 4 cargoes will be supplied by the NNPC in 2 to 3 weeks, and the final of the 6 cargoes will be supplied by ExxonMobil. This supply will facilitate the initial run of the refinery as well as kickstart the production of diesel, aviation fuel and LPG before subsequently progressing to the production of premium motor spirit. Experts say this latest development will play a pivotal role in alleviating the fuel supply challenges faced by Nigeria as well as West African countries. Now, to curb the perennial issue of revenue losses in the mining sector, stakeholders have proposed formalization of artisanal and small-scale miners in the country. This formed issues of discussion at the policy dialogue organized by Revenue Mobilization, Allocation and Fiscal Commission for Development partners, including Senate and House of Representatives committees on solid minerals.
Continue to monitor them not only in Plateau State, but we will expand the program with the support of the UNDP and other agencies to make sure that this thing is replicated nationwide.
And one of those initiatives recommended in that INFF report is developing a framework for solid mineral development to increase revenues to federal, state and local governments, which led to this research.
The Commission is going to be a major stakeholder. I've discussed with the chairman to see how we can synergize to bring about sanitation of this sector for the benefits of the Nigerian people.
And now to trade, the Nigerian Export Promotion Council, NAPC, in alliance with the International Trade Center, ITC, is championing the cause of positioning women-led businesses in the African Continental Free Trade Area under the framework of the She Trades Commonwealth Project. The implementation of the She Trades initiative in Nigeria is targeted at removing barriers to women's participation in trade, creating and executing strategic plans for accessing regional and international markets, as well as developing their negotiation and communication skills.
In emerging markets, we've seen that women enterprise make up only 11% of the setup, In this regard, together with the International Trade Center, forces were joined to come up with a sound business plan which will guarantee or pave a way for them to access credit through the financial institutions. By working with government, the private sector, entrepreneurs to build business capacities of women and to create a better and more sustainable global economy.
Comfort Amadou reports that NAPC and the ITC are also collaborating to increase the participation of women in non-oil export through supporting formal and informal women producers, processors, agripreneurs and traders. Now, in line with President Bola Tinubu's proposal to propel Nigeria's economy to $1 trillion within the next 8 years, the Securities and Exchange Commission has been strategizing to attract more investments into the capital market. Abdul Qadir Abbas, Director, Registration, Exchanges, Market, Infrastructure and Innovation of the SEC, is here to tell us more about such strategies. You're welcome to Business Express.
Thank you, Musa. Thank you for having me.
Okay, to begin with, let's well, you telling us about the plans you have for the capital market. That means the SEC. I'm referring to the SEC, not you in particular. In the short run and as well as the long run, and maybe you be able to. I mean, how it will be. Contribute to this administration's plan of raising $1 trillion economy.
Thank you again, Musa, for having me. It's really an opportunity for me from SEC to actually give you our own perspective. In terms of trying to align the policy direction of the government with what the SEC is doing, I think it is really in line because we have a 10-year capital market master plan. And the ultimate aim of that master plan is to actually, achieve that, trillion target market capitalization. And we have various strategies. And one of the strategies that we deployed or we are actually pursuing is this strategy of opening up the market, trying to attract more investors, trying to attract both local and foreign investors. So one of the asset classes that we're trying to promote is this alternative asset class, which is the non-interest capital market segment. You have the SCOOC, and this is one of the instruments in the non-interest, which we believe it will really assist in facilitating further development of our infrastructural projects in Nigeria, which is in line with the president agenda for deepening. Getting money to actually spend or put a lot of money on infrastructure to actually make the economy to actually become more vibrant. So in terms of strategy, this is one of the strategies that we're actually adopting, trying to attract foreign capital and local capital. We have a lot of capital that people are wanted to actually invest. But if you don't have the investment instruments, there's no way you can be able to really develop the infrastructure. So as I said, SCOOC is one of it, and that is why we have this roundtable 2 days back, the day for yesterday and yesterday, in collaboration with Islamic Financial Services Board. So the essence is really to sit down with policymakers, regulators, and other stakeholders in the capital market to really x-ray that sector and to see what are the issues and propose solution. And that solution will be a kind of win-win solution for both the investors and for the government to attract this kind of capital for our own infrastructural development in Nigeria. I think that is one of the strategies. This is in addition to other strategies that we have in developing, the bond market, especially the corporate bond market, whereby you can, encourage more corporates to come and issue this instrument, to finance, their various business activities. And of course, even the subnationals, which are the states, they can be able to actually leverage on the capital market, issuing both the conventional product and the alternative asset classes like the SCOOC that I mentioned, to be able to actually develop critical infrastructure so that it will be a kind of win-win situation for Nigeria. That is just in a nutshell some of the strategies that we actually develop. And as I said, it is actually in line with our 10-year capital market master plan. Thank you.
Okay, well, the fintech industry has been, growing, you must admit. What's the SEC doing to attract fintech into the capital market?
Thank you, Musa. Again, that's another very good strategy. We have a robust strategy that we put in place to attract fintechs to come to the capital market with with business ideas. We have what we call a kind of regulatory incubation program, which we have just launched, and we have onboarded at least 2 fintech companies right now.
Okay.
What is this regulatory incubation? It is just like a kind of sandbox where fintechs proposal can be tested in that restricted environment to be able to now see its own viability, whether that proposal is even viable. So you have to now come for assessment, and then we have already announced in the market that look, if you have any fintech proposal, you can come and then we now analyze it. If it is an investment activity as defined in the Investment and Securities Act, which is the confine of the SEC, then you come, we assess, and then we now allow you to be onboarded under the regulation incubation. The idea is to try to nurture you to understand the kind of business model, so that later on, within one year, we can be able to come up with a rule that we can now come and now register you. So if you are in the regulation incubation, you will operate just using a kind of limited scope of just 100 investors, for instance. Okay. If we now, if we see the viability within 10 months, we can be able to now give you a kind of green light to say, okay, this is a proposal confined with the objective and is in line with the investment activities as defined in the Investment and Securities Act. Then we now double up a rule if there is no rule in place, or if there is a rule in place, we can now be able to guide you to come out of the regulation incubation and then go and operate in the entire wider scale. So that is really one of the idea in terms of attracting fintech proposal that have a viable proposal which is in line with the capital market to come and be tested. And we are engaging other fintech companies to even do a kind of assessment. Apart from the assessment, we have a kind of stakeholders engagement on regular basis, to be able to see how we can be able to connect with actually the fintech sector, and then see how they can be able to actually come to the market, to the capital market, to facilitate a lot of transactions, because you cannot be doing a kind of traditional way of intermediation. A lot of things have changed, and technology is really the way to go. So for the SEC, we believe regulation incubation is really one area that we can be able to get these ideas onboarded temporarily, and then later on you can be able to now operate in a wider scale. That is really one area. And it may interest you to know, we started this journey about interacting with the fintech stakeholders about 3 years back, when we even have a roadmap, fintech roadmap, and that roadmap actually give us a kind of idea as to how we can be able to strategize to attract more investors into the field. And then I would like to say that as a result of this initiative, we have registered what we call crowdfunding intermediaries and robo-advisories. These are registrable functions which we have defined, and then we have registered 2 crowdfunding intermediaries now. So you can be able to operate within a kind of, you can unlock private capital even from retail investors using a crowdfunding intermediary. Then for robo-advisory, you have a robot that can be able to now advise you, just like how you can just meet a kind of investment advisor that cannot, but this one is going to be, you can use robotic to be able to advise. So we have registered 1, and the door is open. We are open to get more of this kind of fintech proposal or ideas that you can be able to come.
Okay, SEC, in collaboration with the CBN, has from the beginning of the year has been working on the regulatory framework for cryptocurrency operations. How far is this effort?
Okay, thank you, Musa. So I can say discussion is still ongoing in terms of having a kind of a framework that you can be able to say that is really what we can be able to use. For now, we have not actually operationalized the rules on digital asset. But what we are trying to do is to actually leverage on this regulatory incubation. If you have a fintech idea that is viable, you can be able to come and then we test it. And if it is something that confined with our own criteria, we can now onboard. So to answer you directly.
What's your criteria, by the way?
Okay, fine. First of all, if you are coming to do, if you are coming to assess, a regulation incubation program, first of all, you must have an idea, a proposal that can be a kind of solution, a fintech solution to a problem, or a new product that you want to actually test. Secondly, it must be an investment activity as defined in line with the Investment and Securities Act, because we are capital market regulators. So if your proposal doesn't fall within the capital market scope or an investment activity scope as defined, that is our own regulatory purview, we know we will not be able to.
But what about cryptocurrencies?
So that is what I was telling you,
okay,
that we are still having discussion with other regulators in terms of how to actually effectively regulate that space. But for now, what we are looking at is actually regulatory incubation around issues like asset tokenization, for instance. If you have an asset and you want to tokenize, and you have a proposal, for instance, you can be able to approach the SEC with that kind of proposal. Then we analyze it. You have even the criteria is that, first of all, you have to do an initial assessment. That initial assessment will now enable us to know whether you can be able to actually fit into the regulatory incubation. As I said, it must be something that is viable. A solution, is something that is like providing a kind of solution to an existing issue. And of course, our own approach is with a view. The principal plan is to protect investors. So whatever we do, we are mindful about whatever proposal they are bringing to us. We need to have a mechanism of protecting the investors. And that is why we said, when we allow you to be in the regulatory incubation, it's not an approval. It's just for you to test. And when you finish testing, and when we are satisfied, then that is when we will now, we'll bring you out of the RI, regulation incubation, and then we'll now register you. Then that is the formal registration, and then you can now operate in a wider scale. That is the approach that the
now with the digital currency market hovering at global market capitalization of more than $1.3 trillion, what are the prospects for Nigeria?
I think the approach is there is need to have a kind of a holistic approach in terms of regulation. And it's not only the SEC, we have other stakeholders. You already mentioned the CBN. So there is need to really have this kind of conversation. You need to agree, you need to be on the same page. And there are even other regulators, even the NFIU, Nigerian Financial, the NFIU, the EFCC. So we have other regulators that need to really be on the table. So all these approaches that you need to really, because it's a market that you need to really be seen that all the regulators are on the same page. So as I said, it's still a discussion that we are still having with other regulators to be able to actually.
Okay, Ponzi scheme is another issue which has been around, and it's like it's not going away anytime soon. How is the Commission tackling this issue?
Right. Thank you, Musa. So again, Ponzi scheme. That is why we always, if you go to our website, we always give this kind of circular or give a kind of cautionary statement to the investing public or to Nigerians. People should be wary about investing or patronizing a scheme that is not registered by the SEC, or a fund managers that are operating, or so-called fund managers that are operating that are not actually doesn't have any license with either the SEC or the CBN, as the case may be. So the approach is really to issue that cautionary statement, and of course, if there is any issue and it comes to the notice of the Commission actually go after those Ponzi scheme. We know we seal up their offices, and then we now report the matter to criminal for criminal prosecution.
But is there any contact that we could possibly reach you? But you can't say it right now because it will be considered, but maybe we will have this discussion maybe after.
Yes, but one thing that I would say, Musa, we advise Nigerian investors to always be going to our website. We have the list of registered fund managers.
Okay.
We have the list of registered funds. And I think it is really advisable for Nigerians to actually be guided with those, those publications that we're making on the website. Okay. So that at least you can be able to guide against going to the Ponzi's, because Ponzi schemes, they can come out with watery, promises, but if one is not careful, you can just, fall into their hand. Then later on, you now realize that you actually made a wrong, decision. in
Okay.
terms of investment.
Thank you very much, Abdul Qadir Abbas, Director, Registration, Exchanges, Market, Infrastructure and Innovation of the Securities and Exchange Commission. Thanks for sharing your thought with us.
Thank you. Thank you, Musa.
Now moving on, oil benchmarks were headed for a seven straight weekly decline on worries over global supplies surplus and weak China demand. Although prices recovered ground on Friday after Saudi Arabia and Russia called for more OPEC Plus members to join output cuts. Brent crude futures were up 1.93 cents or 2.6% at $75.98 a barrel, while U.S. West Texas Intermediate crude were up $1.82 or 2.6% to $71.16 a barrel. Brent had earlier risen by $2. Both benchmarks slide to their lowest since late June in the previous session, a sign that many traders believe the market is oversupplied. Still on commodities, gold heads for first weekly drop in 4 weeks ahead of U.S. jobs data. Let's now see how commodities are trading around the world. Now, President of the African Development Bank Group, Dr. Akinwumi Adesina, has warned that a new EU carbon border tax could significantly constrain Africa's trade and industrialization progress by penalizing value-added exports, including steel, cement, iron, aluminium, and fertilizers. He said this at the Sustainable Trade Africa conference held at the UAE Trade Center in Dubai, stressing that with Africa's energy deficit and reliance mainly on fossil fuels, especially diesel, the implication is that Africa will be forced to export raw commodities again into Europe, which will further cause the deindustrialization of Africa. He added that that Africa has been shortchanged by climate change. Now it will be shortchanged in global trade. The continent received just $60 billion or 2% of the $3 trillion of global investments in renewable energy in the past 2 decades, a trend that will now impact negatively on its ability to export competitively into Europe. And now let's head to capital market. European stocks rally while U.S. futures are subdued in the last trading day of the week. Bossade is standing by to bring us up to speed with development in the global market. Hello, Bossade.
Hello, Musa. Welcome to the Global Market Review. European market nudged higher on Friday as traders around the world look ahead to a key November job report due out of the U.S. DAX rose 0.23%, FTSE 0.35%, and CAC 40 of France also rose 0.78%. Stock futures in the U.S. is trading low as investors looked ahead to a key U.S. job report. Futures tied to the Dow Jones Industrial Average appreciates 0.02%, while the S&P 500 and Nasdaq Composite dipped 0.02% and 0.17%. Asia markets were mixed as Japan's third quarter GDP was revised downward in a surprise move, while India's central bank held its benchmark lending rate steady. Japan's Nikkei 225 tumbled 1.68% after the GDP data to end at 32,307.86, while the Shanghai Composite topped 0.11% at 2,969.56%. The Hang Seng Index dipped 0.11% 0.07% across 16,334.37. For Africa, Tunisia wrapped up Friday trade positive at 0.21%, while South Africa and Namibia dipped 0.17% and 0.49%. That's the market review for the end of the week. I am Bosede Abel. Back to you, Musa.
Well, thank you, Bosede. Well, let's hope that most of these futures end with a smile, because I'm seeing some reds over there. Well, thank you. Well, this is where we end this edition of Business Express. Business Express return next week. Do have a pleasant weekend.